go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today needs no introduction. He is the co-founder of TraderAid, FinTwit. I won't say darling. Let's go FinTwit royalty. The one, the only Mayhem. Mayhem, welcome to the pod.
Hey, thank you so much for having me, Rocco. It's a pleasure to be here.
Dude, I've been trying to get you on for a while, but with your hectic schedule, you know how it goes. And I was thinking, like, what can we talk about? Because what can we talk about that you haven't talked about before? Because everyone sort of, you know, what's going on in the market, what is the market doing? I mean, those are common things that are out there. So, and then I'm like, cool. What about cybersecurity? Because no one's really talking about cybersecurity, right?
Yeah, it's absolutely true. And it's such a big topic because, you know, we've gone from an era, say 20 years ago, where no one could even care about it. It was not even a discretionary item. It's like, oh, I got hacked. That's an inconvenience. I'll deal with it. You know, some kid in their mom's basement's messing with my business. Nowadays, it's organized crime, it's motivated malicious governments, it's all sorts of threat actors. It's also just being able to go to the black market and literally be able to pay, like you do with software as a service, for cybercrime as a service. Yes. And so we've seen these attacks explode. You know, we've seen phishing attacks explode. We've seen them go up about 600, 700% since COVID started. And they've gotten more sophisticated, and so have the malware and ransomware attacks. So I think it's something that's important to keep an eye on because it's shifting the paradigm for businesses small and large as to how they focus their IT spend.
Yeah, because it used to be, hey, my Hotmail account got hijacked. Oh, well, you know, big deal. So, but just for the listeners, if you're listening on Spotify and iTunes, go and check out the YouTube. Mayhem is sharing some slides as we go along, so you'll refer to that. So just so that you'll know what's going on. So yeah, you were talking about the sophistication of these sort of, you know, these groups. And I realized when my credit card was, not my credit card, my debit card was cloned the other day by tapping, right? So you know the tapping, you go and you tap twice and and then they had all the data. They had everything, and I just started seeing the amounts, you know, go off my bank account. And I was like, hold on. And immediately it's phoning the bank, hey, stop this, whatever. And it was so funny because the purchases that went off were showed that I purchased an anti-hacking ebook in somewhere like fucking Slovenia. So if that's at the height of, I mean, at least they had a sense of humor, right? So
right.
So I'm assuming then we're going to start looking at companies in the space because ultimately we want to talk about stocks.
Yeah. So, you know, one company that I have an eye on in the cybersecurity space is a company called Rapid7. And the reason that I like Rapid7 is they're kind of at the sweet spot of compliance and compulsory kind of vulnerable attack surface mitigation. And so what that means is you've got a lot of companies out there, whether it's law, whether it's them being hacked, whether it's cybersecurity, insurance, compliance, or whether it's them doing business with the government or other clients that require it, that now have to quantify just how hackable they are and then mitigate that. And there's not many companies out there, especially the sort of best known darlings in the space, that really do this. And Rapid7, in my mind, is a leader because not only do they do the attack surface quantifying, but they also do integrated penetration testing. So what that means is you can scan, you can find where the holes are, and you can see if the holes are really holes. And if they are, you're giving your client a much more comprehensive look at the security of their network than Tenable or Qualys or these other scanners are able to do. So I think they have an edge there. I also think they've gotten beaten up just a little bit too much. They're actually trading at a pretty reasonable multiple. I'm just going to pull them up here right now. Yeah, price sales last checked is about 6.25. So
Wow,
it's
okay.
not exactly terrible for a company that is probably going to resume their growth trajectory as business spending goes on, starts to come back. I don't think it's necessarily a play I put on next week or next month, but I think
Yes.
it's something to keep an eye on over the next year or so during what's probably going to be a brutal bear market. We'll have these little gems that we can pick up that get tossed out with everything else.
It's interesting that you said there, the brutal bear market that's seeing the layoff in tech. I was about to ask you, what about the skills or the lack of skills in this sector? Are you worried about that? Is there an opportunity there?
There is. So there's a big opportunity there. In fact, cybersecurity is one industry where there is a enormous deficit of talent, millions and millions and millions of people that need to be trained up, that need to be skilled up, that just don't exist in the workforce. And this is something that existed well before COVID. COVID simply exacerbated the problem because then we had, just sort of a tighter amount of labor force availability. So I would say right now, the big push for the industry is the fact that we're not going to be able to get humans online fast enough. So automation and orchestration becomes crucial.
Mm.
And if you look at the chart on screen, these are a lot of the industries that are getting hit really hard. And as you can see on the number one, it makes a lot of sense, e-commerce and retail. Number two, outside of other payments. So those are two areas that account for, over almost 30% of the cybersecurity attacks. And it makes sense because that's where the money is.
Yeah, that's what the money is. So I want to push us into social trading, but before we get to social trading, I want to talk about the sophisticated scammers that I see at the moment, and it's not banking or financial per se, but they are adopting the digital profiles. And I know it's something that, I don't have to tell you because you get so many people impersonating you on Twitter, and then using your digital good faith and trying to extract money from your audience. And they seem to do it very well. This is not do you want to buy Bitcoin scammers, right? These are sophisticated groups that are targeting social media.
Yes, and it's interesting, like you said, it's not like I'm a Nigerian prince, I have $5 million to wire you. If you could just send me $1,000, we'll be able to sort this all out. No, these guys are pretty good. They clone the profile. They have a Telegram group. They make it look all official. They come into your replies. They reply to people. They find people with open messages. They reach out. How's your trading going? Do you need some help? And they try to make it seem like they're the genuine article. And really, the crux of the problem here is very simple. Twitter's enforcement is lackadaisical. Their capability to verify legitimate large accounts is very, very rudimentary, and they simply seem to have no willingness to address the situation. And it's not unique to Twitter, but it's particularly nefarious on Twitter because it's a platform where a lot of people operate anonymously. And it's very easy to impersonate an anonymous account. And as soon as you tell them someone's impersonating me, they say, well, let me see your photo ID. Well, what does my photo ID say about me being Markets and Mayhem? How does that prove that so there's really no process for that. Nothing.
I see on the slide something that I missed, market segmentation. Do you want to take us through that? Of cybersecurity?
Yeah, absolutely. The big thing that I think that people should keep in mind with what's happening in cybersecurity is that we have an opportunity here that's probably going to outpace other parts of technology. Mm-hmm. And so, cybersecurity is actually a really in-depth field. People just kind of look at it like, oh, cybersecurity, and that's it. But when you drill down, it's almost like its own tech industry. So we talked about attack surface mitigation. You've also got endpoint protection. You've got corporate firewalls. You've got VPN interconnectivity. You've got a lot of sub-segments in cybersecurity that are also growing rapidly and are important because without them, companies cannot do business securely. So I think that one of the things about cybersecurity that makes it a very interesting industry is also that there's opportunities in different parts of the space. It's not just CrowdStrike or SentinelOne or Zscaler. There's a lot of companies underneath the surface that deserve a little more attention. There's also very large players like Microsoft, which actually play a really big role in cybersecurity and don't necessarily get the attention for all that they're doing. One such study that I think will help everyone listening, if you don't use two-factor, use it. Because it decreases the risk of your account being breached by 99.9%, according to a study done by Microsoft on their own accounts.
I had my LinkedIn account hacked twice. Before I put on two-factor security, and nothing since. Just stopped it.
Nice.
Boom, there. So that's why I give big thumbs up to two-step. Like everyone should, like on your Gmail, or if you're using Gmail or any Google related product, or if you're using Facebook or any Meta product or Microsoft product, just go two-step. You need to.
And one quick recommendation for everyone listening in is, if you're using two-step, if you can, use an authentication app like Authy or Authenticator. SMS is good, but the apps are way better, because now we're starting to see hackers intercept SMS messages to get into accounts as well.
Yes, absolutely. Let's move on to social trading, what I call social trading, right?
Yes.
I mean, we've basically we've seen social trading. We know what it is, but we're not really sure what effect it has had on the stock market itself.
Yeah, it's something that I think has changed the paradigm a lot. So I started trading in 2005, and there was nothing like this. You could go to Yahoo message boards, and it was just people spamming their book. But it wasn't viral, didn't really go anywhere, it didn't have this big impact. There was nothing like Reddit, Wall Street Bets. Twitter wasn't really a thing at that point at all. It really started to come about in 2008, 2009, and really started to grow its momentum years and years later. So back when I started trading, it was more about doing your own research, seeing what was trending, looking at the charts. Now it's completely different, because now we have a cadre of brand new investors that really started over the last several years, and they're not taking the traditional approach. A lot of the time they're just going to Reddit, they're looking on Twitter, they're looking on YouTube, they're letting their biases and their interests be influenced by other people, usually large accounts with large followings that seem credible. And that seems okay on the surface, and for a while liquidity was very abundant, it worked, because you could throw a dart at almost anything and it would go up. But now we're starting to see that kind of invert. But the big thing that I've seen is a combination of two trends. It's the social trend of, what people are saying and how that's influencing price, as well as the usage of options, which is increasing leverage and also the impact on price discovery. And I think between those two things, it kind of accounts for what we saw in GameStop, in AMC, and even in some stocks that didn't necessarily mean to become meme stocks, but got drug out into the same thing, like Palantir. And I think that is something that was one of the biggest drivers of some of the biggest delta squeezes we saw last year. Obviously, GameStop and AMC were a part of that, but look at Tesla.
Yeah,
it's got the largest call premium almost every single day. It's like the largest delta squeeze we've ever seen in history. And then last year, Asana, Affirm, Cloudflare, all these had these sort of perpetual delta squeezes as well. And the interesting thing about that is, when the sentiment drops and the demand for call premium drops, you're left with just nothing but a pocket of hot air below. And these things can precipitously crash. So the danger is, when the social media frenzy kind of inverts, things can get violent to the downside.
Yeah, I could completely agree with you. Tell me, so we've talked about going viral, and then I sort of want to touch on the gamification of trading, because I mean, we've seen what Robinhood and now eToro is still pushing with gamification. They're trying to make it fun and easy for people to partake, but as you said, the market conditions have drastically changed. It's not as fun anymore, is it?
No, I mean, I think at the end of the day, if you're trying to be bullish in this market, it's very, very hard. I think a lot of people who kind of cut their teeth over the last 2 years are not used to this sort of unforgiving environment. We went from an era of abundance to an era of scarcity. And I mean an abundance of liquidity, but also an abundance of interest in the market, and also an abundance of things. I mean, it used to be, you go to the grocery store and pay a reasonable amount of money. You could go to the pump and pay a reasonable amount of money. You could pay a reasonable amount of money for rent. All that has compressed the elasticity of the budget for like the bottom 40% of people. So not only are retail getting drug out because the market's unforgiving, but also because the greater economic conditions are very unforgiving with the rising cost of capital goods and services. So I think it's just been kind of like a vice, just squeezing the life out of them. And we've seen a lot of trends change as a result of that. Options activity has changed. It's a lot less pronounced than we saw last year. Last year, we set 2 all-time records in February and November of last year. We saw on screen the biggest call premium we've ever seen in history paid. And then in November, we saw the largest amount of put premium ever sold. So it was like maximum bullish. It was a giant warning sign that bad things were to come because people were exuberant and euphoric.
I don't have arguments on Twitter. I have discussions, right? Because if you get dragged into arguments, that's just, it drains your energy, I feel. But I put a tweet out there and I said, I feel that a large part of me feels that people easy access to financial instruments is a good thing, but I feel that you do not put a person in a car without them going through some sort of training, because yes, it is not only hurting yourself, but it's hurting other people around you. That was my metaphor. I got some pushback saying people, you can't compare driving to trading and stuff like that. But what is your opinion on, the ease of access to markets?
Yeah. So, I mean, I want to hit on the gamification point too, because that's really important. So, first, I think that on the surface level, giving people more access to control their financial independence and freedom is a great thing.
Yeah.
But putting them out, and I think your metaphor is actually very apt, because, you could do a lot of damage if you're driving a car, you don't know what the heck you're doing. Of course, you can't necessarily destroy your life savings that way, but you can in the market, which, you know what I mean? So it's actually, in some ways, it's a little more deleterious. You can have a car crash. If your car is well built, you're probably going to be okay. If you have a crash in the market, you might destroy your future. Yes. And so I think in some ways, it's actually a little more dangerous if we talk about just financial health, that people have access to these things and they induce them to do things they wouldn't ordinarily do. So the gamification thing, that concerns me because it feeds on this dopamine cycle. It feeds on peer validation, and it feeds on this sort of impulsivity that we don't want people to have. When you're making important financial decisions, the last thing you should do is just be blindly hitting the buy button.
Yes.
And of course, those brokers are having you buy at market too, most of the time. So you're getting, and then they're doing payment for order flow.
Yes, but they don't care because whatever you do, they make money. And it's always, it's funny because what we now know to be all-time highs, people were shouting, look at the price, look at the price. And when it's at lows, not all-time low, but when it's at lows now, people go, oh, look at the value, look at the value. And it's just it's a funny way of selling people a narrative and selling people stories to get them to engage in activity that they might not know what repercussions there are.
I agree. And I think it's dangerous because the other part of it is when at least in the US, there's no financial education at all. You go through school, you don't learn how to balance a budget. You don't learn about compound interest, whether paying it or earning it. You don't learn about investing. You don't learn about anything. You don't learn about even how to run a checkbook. Mm-hmm. And so now they're saying, oh, well, you're 18, you can go and trade options. What? Yeah. There's got to be more of a foundation of financial education. And I would go so far as to say the same is true of using the internet. People should have some idea as to what the internet is before they even log in, because they could avoid a lot of the pain and a lot of the unpleasantness. And there's plenty of that stuff out there. So I think ultimately, I support 100% giving people much more control over their financial future. But I think that amount of responsibility should come with a foundation of an education before that door is opened.
Completely agree with you. Before I let you leave today, I want to talk a bit about your trading philosophy. And you've been active in the markets for a very long time. You've seen a lot of people come and go, and you've managed. I always have respect for people that, the longevity, because some people you see, they pop up and then they go away. And you've seemed to be there for a very long time. Talk to me about just one or two thoughts about your methodology that you sort of, and I'm guessing that you guys teach at TraderAid as well.
Yeah, absolutely. We do. TraderAid is kind of a project that's Horst and I built in January to help retail investors and traders become more consistent. It's sort of micro to macro. It matches my own style. So, my goal when I joined Twitter many, many years ago, it was to really try to pay forward the generosity that I've received. Because I've been fortunate enough to grow up in a household where investing was frequently talked about, to meet a lot of people that were investors and traders. And I felt like, boy, that's really nice. And when I was, cutting my teeth in trading in 05, 06, nothing like that existed. There wasn't a lot of generosity. There wasn't a lot of people out there on the internet really offering that kind of information. So I felt like maybe I could try to build a following by helping others become more consistent and also helping them kind of learn the bigger picture. So my own style is a combination of looking at the market through different lenses. I like to look at the market through the macro lens. I like to see what the big picture is, and then I like to drill down technicals, sentiment, rotations, fundamentals, and try to get coalescence. I don't necessarily need to see everything tell me the same, but at least a majority of the indicators, like the bigger picture, the technical picture, the fundamental picture. If I can get some sense of cohesion there, that there's an opportunity, I'm more likely to get involved. And the way that I trade is I have 3 time factors that I play in. I play intraday, I play swing trade, and I also do sort of longer term, what one might call investments. Although everything is really a trade. You're always trying to get in and you're always trying to get out, and just capture the bulk of the move. So I'm not worried about calling tops. I don't care about calling bottoms. I just want to capture the bulk of the move, whether it's up or down. That's kind of my trading style, whatever the time frame might be. And I'm pretty systematic in my approach. I like to follow trends for my swings, whether they're long or short. And in this type of environment, I like to run a long short book. Right now, I'm leaning a little bit more on the long side because I think the market has some room for some serious reflexivity. But as it does, I'm taking off those longs, I'm piling back into shorts, and I'm just kind of riding the wave here. And 2022 has been a trader's market. It's been very technical. It's been very driven more by event catalysts and flows and levels than really any other kind of market that I've seen since probably the great financial crisis. And so it's not your typical bull market, in the sense that we're in a series of lower highs, lower lows. You can say we're now technically in a bear market, even on the S&P 500, but that doesn't mean that there's not tons of opportunities. In fact, it can be as simple, and I know this sounds silly, but turn the charts upside down and start looking at put spreads. There's plenty of opportunity in puts too.
Mayhem, thank you so much for joining me today. If the listeners want to go and, obviously, we'll drop your links in the comments, but if they want to go and follow you and find out more about what it is that you do, where can they do that?
Sure, absolutely. Check me out on Twitter. My Twitter name is Mayhem 4 Markets, Mayhem for Markets. I'm also at TraderAid.com. And I've got a YouTube channel. It's youtube.com/c/markets and mayhem. So that's the kind of 3 areas that I operate the most. And also, I want to give you a shout out, Rocco, because I think you do an awesome job on this podcast. I think it's really, really great information you're putting out there. You've got a lot of wonderful guests. I'm honored to be among them. And, I want to see you grow and thrive as well. So I'm really happy to be here. And, if there's another opportunity to join you again, I'd love to do that.
Stop it. But please go on. Flattery will get you everywhere. Mayhem, thank you so much for joining us. Absolute pleasure. Ladies and gentlemen, FinTwit Royalty. Go and follow him. To our listeners, peace, love, and prosperity. I'll catch you in the next one. Cheers.